Investors Hangout. We are at the fag end of 2018. How should we describe this year? Well, a year of turmoil. And what do we expect in 2019 is what we will discuss in today's Investors Hangout, brought to you by Aditya Birla, Sun Life Mutual Fund and Value Research. With me is the CEO of Value Research, Dhirendra Kumar. Dhirendra, welcome.
Thank you.
How would you term 2018 as a year? I just mentioned it as a year of anxiety. Would you agree with me, or a year of turmoil? Would you agree with that? Or would you like to coin it as something else?
No, I would agree with all of it. Anxiety, turmoil, hope, hopes not materializing, all of that. But but at the same time, there is nothing unusual about it. It is like this only. Yes, we got some surprises. And that is primarily expectations, the built-up expectations which did not materialize, and it is a very cyclical thing. If you look at what was 2017, when equity funds generally went up by 40-45%, small cap funds went up by 50-55%. It raised huge expectations. That is where investors were putting money, expecting that this thing will actually extend and it will repeat in 2018 too. That did not happen, and it is always like that. The reversion to mean. 2018 has been a year of anxiety on one other front, which was extremely disappointing. Fixed income funds, particularly the liquid fund. We keep talking in our discussion. We have kept talking all through the year that when you have money for a couple of weeks, couple of days, put your money in liquid fund and forget about it, not to worry. It became worrisome. Few liquid funds went down in value because of the IL&FS crisis. So that was one thing. But otherwise, I think, 2018, I think it's a great year. I would say that it is a maturing of Indian investors. We have seen all this anxiety, turmoil, and individual investors kept putting their SIP money. Not only that, the scale of SIP money coming into mutual fund has grown every month, despite all the disappointment, which it has never happened in the past. Mutual funds used to get money only when the going is good. Bad times, people cancel their SIPs, take their money out, they start cursing, only to vow that they will not come back again for a couple of years or forever. Nothing of that sort happened, and which I think is a great foundation for individual investors, because if you take a long-term view, if you continue your investments in the bad times, you are unlikely to be disappointed, because investing isn't a game. Isn't a game which you have to win the 2018 season. It is something which is far more crucial. You have to achieve your financial goals. They are critical goals. Non-negotiable ones: child's education, your retirement money, accumulating for the down payment of your house. These are goals, and you really have to look at it like that. It's not a game that you have to win every year, and it isn't a match.
Okay, you say that this is not a game, but RBI and governments, not seeing each other eye to eye, and the slowing earning growth period, weak global markets, this is something that doesn't happen every year. Surely global weak markets can happen, but then the disagreement between the RBI and the government, for example, we don't expect that to happen every year. Having said that, we also see that there is momentum being gained in the SIP, somewhere around 9,000 crore per month. Yeah, there's a month. So will that momentum be sustained in the coming year? Is there a good, rakhi gayi hai kya achhi, and we can go forward now and take it on from there, or something will derail this movement?
I would say that, all these things, if you look at all the negatives, RBI and government spat, corporate earnings not going up, oil prices going up, rupee depreciating. These are very usual things every few years. Of course, it doesn't happen all the time, but it happens every few years. And there is nothing unusual about it.
Okay.
One thing is that, rupee will depreciate whenever oil prices go up sharply, because that is our biggest import bill. That apart, Rupee will always depreciate over a period of time because the interest rate differential in the Indian market and globally is so high that to remain competitive, we will have to depreciate by 3-4%, 5% every year. And it doesn't happen in a nice smooth line. If it doesn't happen for 2-3 years, it will happen with a lag, and that is what happened. So I don't think when I take a long-term view from the context of investing for my retirement or investing for a couple of years. These are times when investors are doing the right thing. In fact, if you look at the scale of SIP, 2018 has been the most. FIIs have pulled out money, and in 2018 their net inflow there has been a net outflow, not an inflow. And if you compare it, and despite that the market hasn't crumbled. Reason being, SIP money has been able to match the FII outflows. So that I think is a great news.
So the resilience of the domestic market.
Yes, resilience of the domestic market
is something to be lauded.
Absolutely. And if you look at some of the fundamental changes happening to the market, and it has happened in the last 2-3 years, EPFO has started putting in money. Today their investment comes every month. And that is, in 1.5 years or 2 years' time, the index fund in which they invest the money has become the largest Indian equity fund, the Nifty ETF. If you look at the NPS money, which is scaling up substantially, and now 14% of contribution will come, last week this was a change. This is also regular money which will come into the market to stay there for a very, very long time and keep coming every month. So I think, fundamental changes happening to the market. GST is streamlined now. Now we get a report that about 1 lakh crore comes by way of taxes on account of GST every year. So when I look at the cleaning up of the system, organized businesses becoming the mainstay or coming on the forefront, fundamental changes happening to the economy. There will be beneficiaries. There will be losers. There will be failures. But overall, if we are going to be a better economy, if we are going to be a more profitable economy, if our companies are going to become, if we are going to have better future, which undoubtedly, some of these foundational things happening will take a couple of years to show. Despite that, I think the bigger trouble is that some of the businesses itself are facing disruption because of technological changes, that has always been the case. You can always say that all the big changes, cell phone led to the demise of the landline network, and so now we are witnessing such changes far more rapidly, much faster. Those are bigger issues. How companies will navigate the change which is happening in an unanticipated way. If you look at the electric vehicle, they're insignificant part today, but it looks very clear that in 5 years' time it could be a completely different environment we might be using, we might be in. If you look at the way the consumer has shifted from the cable TV network or the television, the content programming, that is undergoing a transformational thing. People are becoming choosy, and those changes are far more significant.
So should I deduce from this that the Indian investor is now a mature lot, and now they're ready to face any eventuality that happens, or rather they understand the eventuality that's going to be happening in the market? Would you say that we're ready for change?
No, I would say that some Indian investors have chosen to appreciate, or are beginning to appreciate equity. They understand how to benefit from it, and it is still early days. Okay. Very few investors, because 9,000 crore every month coming in a country of this scale is insignificant, but it's a good beginning. It's actually, it has happened from zero. So this, I think, is very significant, and good idea catches like fire.
So, Dhireen, do you, after all, are listening to you, do you think that the market in 2018 had no clear direction? Nifty or large scale barely returned anything, small caps bled, and that was a major concern for the investor. What do you think about it going forward? Is this the right time to invest in small caps?
I would say that your long-term money should be invested in equity.
Okay.
Uh, Depending on what kind of investor you are, if you're a first-time investor, start with a balanced fund. If you are an investor who has believed in equity, understands what small cap is, you can withstand or stomach that big decline that comes in the way. Always go, have a larger allocation to small cap. But
Okay.
small cap is not meant for everybody. It's meant for that mature investor who has experienced market and is not the only money. Otherwise, the simple rules remain the same, and I don't think in any of our hangout session we are going to change those rules at all. Put your long-term money in equity, diversify, and never invest at one go. If you follow these three things and tilt it to large caps, to small caps, only if you have been in the market for 5 years,
Okay.
you
understand
it will
it.
go down in value substantially, and you will still not panic.
Okay. A big event that's coming in 2019 is about the general elections. Now, what repercussions can that have on the investor's life? Should they be worried? What should they be doing?
It might sound counterintuitive, but elections don't matter when it comes to businesses.
Okay.
In fact, continuance of this government will only reinforce that there will be greater continuity. Actually, we have not seen big shift in economic policies. Only the speed of or expediency is visible. If you look, so much has been talked about Aadhaar, so much has been talked about GST, so much has been talked about how we should be. If you look at all the changes that has come in our economy since 1990, if you look at some of the bigger things, the delicensing, look at the freeing of the monetary policy or
Right.
the interest rates,
Right.
which for 50 years we never had. So interest rates now change. If you look at the, starting of NPS, moving from defined pension system to contributory pension system. If you look at all the big things, all these changes have been executed, irrespective of the government. Those big policies don't change. Only the speed of things happening, perception of corruption, the ability of a government which is in majority to do things with speed and with confidence, that changes. So I would say that markets it won't matter to the market if we have a government which has a majority. It will be disappointing for the market a little bit, but I think it is going to be only sentiments, because the primary driver of businesses is if they make more money, they'll be valued higher, and irrespective of the government.
You said it very rightly. If you make money, it doesn't matter who comes into power.
Comes into the power. Big economic policies, we don't see a big change in the direction.
So what should my strategy be in the year 2019?
Same as it was in 2018 or 2017 or
Continue.
Yeah, make sure one has to really absorb this. I sound like a stuck record, but you are generally in two phases of your life. A phase in which you are accumulating your savings, and a phase in which you are taking money out of your accumulation. You are converting a cash flow into a capital, or deriving cash flow out of the capital created. You have to follow that the money which is not needed for a couple of years should be in equity. Money which you need it in near term should never be in equity. You will be in for a great disappointment. If somebody just drifted in the market in 2017 and got attracted to small caps, is in for a nasty surprise, and I think he'll be driven out of the market, or maybe they have gone out, never to come back again. And that is the wrong thing. So benefiting from equity is take that view, do these 2-3 things, and it will benefit you. I would say that in 2019, investors should look at their investment values or investment portfolio values less often, because it is going to be a very noisy year. Noisy because the build up to the elections is always noisy.
Right.
The emergence of the new media and the intensity of the media coverage only causes greater anxiety. And but that is not, you have to really think that when you invest in a mutual fund, and the mutual fund manager invests in 30 businesses, one of the businesses happens to be Maruti Udyog, other happens to be ICICI Bank, something else. A lot of people get up in the morning to avail the product and services of those companies. And is that going to change? Are companies going to stop making money? It has happened in the past. We have seen some knee-jerk reaction to some news, some big such news, and that is always counterproductive.
Right.
Remain invested, remain fully invested in equity for your long-term money, and ignore the noise.
And what about the geopolitical situation worldwide and the oil and all that? That is going to impact the sentiments surely.
It will impact
so be ready for the volatility in 2019 as well.
You really don't take decisions because oil prices go up. You don't stop driving car. Likewise, you shouldn't, things will readjust.
Stop investing.
Realign. I don't think it is possible for people. In fact, if you are of the I would say that this is where selectivity, the course that you take becomes crucial. If you are the nervous investor, never invest in an all equity fund. Invest in the balanced fund, and that is good enough for you.
Okay.
It will be a compromise of 2% over a 20-year period, but that is still okay. You will still be deriving 80% of the benefits of equity, and you will never be unnerved. If you are the kind who can really stomach reasonable volatility and you will not be upset with that, go for an all equity fund.
Okay.
Fairly well diversified. What we keep saying, the tax saving funds and the multi caps. If you are fine, if you have experienced, want to really maximize your return, have a 40% allocation to small caps. Okay. I don't think this will change as years change.
So what Dhiren is saying is have grit and determination and go for your investments and go for your SIPs as regularly as possible. Right, Dhiren?